We shouldn't expect this week to stick to a script, because for the EU referendum, there isn't one. Usually traders know the drill. Take it easy on the vote day, prepare for potential madness on results day. But this time around, investors know that some hedge funds have commissioned their own exit polls early to try and get a steer on what the end result might be. This means markets, chiefly sterling, could test everyone's nerves both on the vote day, in the run-up to the widely available exit polls at 10 p.m, and on Friday. So first, let's go through what's at stake markets-wise. Sterling is the key thing to watch as it affects everything around it and potentially muddies other market reactions. It's already been on a white-knuckle ride. As this chart shows, for all the lurches lower on referendum nerves, the Queen's pound is now pretty much back to where it started the year. If we stay in the EU, it looks like the currency could jump well into the 150s against the dollar. The pound has had a serious rally in the last few days, as the polls have suggested, no matter how tentatively, that the vote could swing to Remain. This chart shows you that that rally is one of the biggest since the financial crisis. There's a huge weight of bets against the currency out there, so it looks like a coiled spring. If we vote out, well, if George Soros says that'll lop 15% off its value, who are we to argue? But that would be a huge boost for UK stocks, potentially. Perhaps ironically, buying FTSE 100 stocks is being cited as a neat way to hedge against the UK voting to leave. In addition, if sterling falls too far and too fast, that raises the risk of a rapid pickup in inflation, denting the case for buying UK government bonds that otherwise could be expected to gain in anticipation of an economic downturn. In short, it's a mess, and the mess could set in well before we know the final result on Friday. Those exit polls commissioned by hedge funds mean that every flicker higher and lower in sterling on Thursday will be, rightly or wrongly, seen as a sign that someone somewhere knows something. At the same time, though, liquidity will be very thin, so very small trades have the capacity to provoke outsized moves. And remember, this matters for stocks too. It's going to test everyone's patience. Good luck.